more about the various options you can choose with regards to the trading tool. So the first thing to look at is obviously the footprint shows us what is occurring at each price. Now, on the right side of this graphic, you can see how the prices are represented horizontally. Second to that, obviously, we can see the volume within each price. Now, not only can we see the total volume in the summary box below, but we can also see what is happening at every single price in terms of volume. Now, traditionally, a candlestick will simply just show us one rotation, the open, the close, the high, and the low. However, with a footprint, we can see that every single price that the rotation is traded over, we can see what the volume transacted at every single price looks like. And that is defined with a simple two numbers. Now, these two numbers simply represent the interaction at the price. On the left side of the box, we can see what the sellers have sold at that price. On the right side, we can see what the buyers have bought at that price. The X in the middle simply differentiates between the two. Now, the net difference between what is on the left and the right is what we call the delta. Now, that delta is nothing more than the order flow. So it's telling us at each price who has ultimately traded more volume. Is it the buyer or is it the seller? And that gives us an understanding of the order flow occurring at each price. Now, in terms of the delta, what we sometimes want to look at over a series of rotations or time is the cumulative delta. So that's to summarize, that's simply the cumulative order flow. So it's the total delta that's been occurring over a number of periods or rotations. That can be seen in the information box below. The next element we look at is time. So again, like I mentioned, each one of these rotations can be time-based. They could be 5 minute, they could be 30 minute, they could be daily, or they can be based on rotations. Now, the next thing we look at is relative changes within the tool. And this is where the tool is highly effective because we can see two types of relative change. The first is with regards to the color. Now note you'll see darker and lighter colors. The darker colors simply represent higher amounts of volume being transacted at specific prices, whereas the lighter volumes represent lower relative volume. The second type of relative change we can see is in the summary box below. We can see the relative change between volume, as well as delta, and obviously the net change in cumulative delta over a period of time or rotations. The last thing we can add to the footprint tool is other types of trading tools such as volume weighted average price, market profiles, the 50% or the midpoint of the market with the high, the low. We can add a number of other traditional trading tools to the footprint tool. So this is an expansion now of the footprint tool. What we're going to do next is we're going to actually look at a Blackboard example and highlight all of these 7 elements on a practical example utilizing the Blackboard. So welcome to the first of the Blackboard learning series. This is going to be an overview of the footprint tool. Now, the first place to begin is to talk about the traditional candlestick. So what you're effectively looking at here is the footprint tool in its entirety. Now, within each one of these rotations, I've included a traditional candlestick on the left side. And the reason is I want to really sort of drive home the differences between, if you were looking at just traditional candlesticks versus if you incorporated the footprint tool. Now, what we can see straight away, obviously, if we have the candlesticks there, we can see the traditional open and close, and obviously we can see the high and the low. However, what we cannot see is all this information in between, which is known as delta or volume at each price or order flow. Okay, so by simply not having the footprint, you are discounting or you're losing out on a whole host of information that exists to market participants. Okay, so with that in mind, let's drill into the footprint chart and look at all the various elements as we discussed in the previous slide. So The first things first, price. As we can see, price is being depicted on the right side of our chart. Every one of these segments is occurring at one price. So this would be price point 70, 71, 72, 73, etc., etc. So we can obviously see the footprint over a number of prices. The next thing to look at and talk about is time. Now, the footprint can be depicted in two different formats of time. The first is a typical traditional time-based format where we could select, say, a 5-minute footprint or a 30-minute footprint or a 60-minute footprint. Simply, each one of these rotations will be based on the selected time. Now, for those of you that are more swing type or longer term traders, you can even create the footprint utilizing daily footprints. What professional traders do look at is we do have a daily footprint so that we can determine what the net positioning is, what the net delta is at the end of each session. Okay, the other second type of rotation type we can have, which is also time-based, is simply a point and figure. Now, in this example, we can see a point and figure because we can see that the time is varying between each rotation. So each rotation in this example is simply based on a point and figure. What this means is that every time the market moves a certain number of prices in one or the other direction, say 7 prices up or down, it creates a new rotation. Now, throughout this course, we are going to talk about both about time-based rotations as well as point and figure rotations. And the reason being is very simple. Certain strategies, like momentum-based strategies or flow-based strategies, tend to be better revealed utilizing a point and figure chart. Whereas more sort of relative type change strategies and counter change strategies can be better seen utilizing a time-based rotation. Okay, now that we've spoken about the rotations, let's turn our attention and talk about volume. Now, there's two types of volume that you'll see on the footprint chart. The first is the total volume within each rotation. The second is the total volume, or the volume being transacted at each segment of the footprint. So let's take a look at this rotation now, and let's sort of magnify this specific rotation or this specific segment of the footprint at price 74. So what we've got here is 782 times by 378. Now, all this represents, on the left side, we've simply got what the sellers have sold at price point 74. On the right side, we have got what the buyers have bought at price point 74. Now, the net difference between the two of 404 is simply regarded as the delta. So it's the net difference between the interaction between how much volume a seller has sold and how much volume a buyer has bought. Now, that net difference can be represented as a positive or a negative. Now, when there is more selling at a price segment than there is buying, we tend to get a negative number. And when there is more buying than selling, we get a positive number. So what you would see, if for instance in this example, is we would have minus 404 in this current segment because there's more selling at this price than buying. Okay, now what you'll see obviously is that over the course of a rotation we get a cumulative delta. And that cumulative delta is shown to us in the second box of the summary statistics. And we can see that the net delta, or the net cumulative delta within all these price points, equates to minus 820. And what that's telling us is that there was more selling than buying in this entire rotation over price point 70 to 80. Now again, that in its own doesn't mean much, okay? For now, we're just looking at purely what every single piece of information on this chart represents. So the next thing then is to talk a little bit about order flow. So all that order flow is it's the manner or the interaction occurring